So I think we are okay now. We can start. So welcome back to our series of webinar from Wozniak Legal. I'm so happy to be here and be able to present this topic. Today's webinars from Anna Kapusta and me, Grzegorz Wozniak, will be about IP Box. Let me just give you some practical information first before we start to go into the details of this topic. We intend to go on for approximately 45 minutes to 1 hour, depending on how smoothly it goes. It is possible to send us questions during the webinar by clicking the question button. So feel free to send us questions during the webinar. No other participants will see the questions, so you should not worry too much that you will be connected to the specific question. We'll try to answer these questions at the end of the webinar during the question and Q&A session at the end. If not, we will try to respond to these questions after the webinar to your email addresses. Before we start, so the subject of the webinar you can see on the slide: overview of the IP box scheme in Poland, conditions qualifying IP, and who can benefit. It is actually a follow-up to our webinar, which was staged in September, which was the first introduction to IP box scheme in Poland, which is very popular, and more companies try to apply it. So before we start, a brief introduction of our company. My name is Grzegorz Wozniak. I'm a Polish lawyer specializing in corporate and commercial law. I used to work for Allen & Overy for many years. Then I set up my own law firm, Wozniak Legal. And Anna Kapusta, my colleague, is a Polish advocate. She also specializes in corporate and commercial law. Here our here our contact details. Yes, you can contact, as I said, either during webinar sending questions or after the webinar. And by the way, it's quite important. This panel is being recorded on YouTube, so even if you have no time, you can stop watching us and come back later and, and rewind and re-listen to what we say. This is we try to present it in a maybe not entertaining, but in a easy way. But the subject is difficult. IP box, old nexus are very complicated issues. So these are contact details. You can contact us directly on emails or contact us through telephone. About our company, Wozniak Legal is a Polish medium-sized law firm established in 2007. Our office is in Warsaw. We have about 20 fee earners. We specialize in corporate commercial law. Our specific niche is advising foreign investors to start up the business in Poland. That's why we come across very often with IP box and the attempts to apply it in practice. So now going back to the subject of our webinar, Anya will present the agenda for today's webinar.
Okay, so as for our agenda, I will start with a brief introduction outlining what we will discuss today. So first, we will explain what the IP box is and why it was introduced. Next, we will briefly present the legal framework, including the statutory basis and eligible entities. Then, of course, we will describe what the eligible IP rights are. After that, we will walk you through the step-by-step application process, focusing on registration, record keeping, and of course, compliance. Next, we will discuss common pitfalls and challenges such as documentation, qualifying R&D and tax authority scrutiny. Then we will share a case study featuring practical scenario from the software sector. And of course, finally, as always, we will conclude with a Q&A session. Okay, so we shall start.
Yes. So the question, big question, what is IP Box and why is it was introduced? IP Box stands for intellectual property box. This is not Polish invention. This is applied in many countries all over the world, mainly Europe. So traditionally, as we know, there are no good taxes, only bad and very bad ones. In Poland, the corporate income tax is 19% with additional tax imposed on dividends. However, the IP box regime is a welcome exception and serves as a genuinely effective incentive because under this regime, the taxpayer pays only 5% on qualifying income, making it one of the most attractive tax incentives in Europe. Other countries have similar. Just for your information, the IP box regime varies from country to country. It's similar in a concept because it basically reduces the tax rate from the standard, which is normally about 19 or 20%, to this preferential tax rate. In Poland, this is one of the best numbers in Europe. The Netherlands have similar system. They have 7%. The United Kingdom has also IP box. It's 10%. I think Hungary also have a similar system. It's 4.5%. But definitely, Poland is one of the most attractive ones. Why it was introduced? That's what we say here. If you could another slide. It was introduced in 2019 just to promote innovativeness and to attract investment in innovation and technology development and incentivize the commercialization of intellectual property created or improved through R&D activities. And it works in practice because Poland is one of the most popular business locations in Europe. And even without this incentive, Poland, thanks to its central location, very attractive labor market. But this is an additional argument to attract investment mainly from the US, because US technologically is very advanced, and very often there is a cooperation between US companies and their local subsidiaries to develop or to create the R&D centers in Poland. So that was the motivation behind opening before adopting such legislation. Legal framework is not too complicated because it basically has been added into two basic legal acts. There has been changes to the corporate income tax law and personal income tax law, and as you can guess, this incentive can be applied to companies, and this is governed by corporate income tax, and this is the most common example. But also individuals who engage in R&D activities, and they are covered by personal income tax can apply and use this incentives, which is also quite popular. I think that in practice, what we see on the Polish market, that we have two groups of taxpayers using this. We have a very large number of entrepreneurs, Polish entrepreneurs or self-employed individuals who use this incentive. So this is one group, and then second group is actually big corporates who use this, as I mentioned earlier, between like US parent company and the Polish subsidiary. These two groups dominate the market at the moment.
Okay. And now I will tell you more what are the eligible IP rights. Here on our presentation, we have the list of eligible IP rights. We see patents, utility models, copyrights to computer programs, of course. So the most typical eligible IP rights are, we think, utility models, industrial designs, and of course, copyrights to computer programs. I prepared few examples. So utility models often protect technical solutions or improvements in machinery tools or small inventions that offer practical utility without meeting the full patent criteria. So, for example, it could be an improved system for mounting photovoltaic modules or a new type of cell clamping mechanism for cable tiles. As for industrial designs, they protect the aesthetic appearance of products, such as the shape, pattern, or, for example, ornamentation. This can include an icon layout of a mobile app interface, for example. As for copyrights to computer programs, they cover software developed for various purposes, ranging from specialized business application and also mobile apps to large-scale enterprise software solutions or innovative algorithms. So these categories represent the types of intellectual property which are most frequently developed and commercialized by companies benefiting from the IP box regime. To benefit, entities must maintain detailed documentation linking R&D activities, IP creation, and of course, income derived from the IP, which is critical for tax authorities' compliance check. Okay, here we have a step-by-step application process which are registration, record keeping, and of course compliance. First, we will start from legal analysis. So the taxpayers must own or co-own intellectual property rights that fulfill the legal conditions. Of course, these rights must have been created, developed, or significantly improved by the taxpayer through their own research and development activities.
Improved because under the copyright law, any improvement
Yes.
of a work can also be regarded as a work, right?
Yes, yes.
So improvement can also be like an additional copyright object.
Yes, yes. The taxpayers must, of course, actively conduct qualifying R&D activities that are directly linked to the intellectual property. And these activities needs to meet the criteria set out in our legislation. So next, it is essential to maintain proper and detailed records. So this includes tracking all R&D expenses, income derived from the IP, and other financial data related to the commercialization of the IP. Of course, accurate documentation proves the direction, connection, or nexus between the R&D efforts and the resulting income from intellectual property.
Yes, so this is the first step in
Yes.
this. We call it step-by-step application process. So the first step is just carrying out analysis
Yes.
involving various professionals, because it has to be lawyers, it should be accountants, especially accountants who specialize in IP or in this tax incentives, because this is like a specific, very specific area of expertise.
Yes, exactly. And the second step is we have here income qualification and calculation. So income eligible for the preferential 5% tax rate under the IP box includes various types of revenue directly derived from the qualified intellectual property. This typical covers license fees earned from allowing others to use the IP, proceeds from the sale or transfer of IP rights, of course, income embedded in the pricing of products that incorporate the IP, and compensation received for infringement or violation of IP rights. So to apply 5% tax rate accurately, taxpayers must carefully identify and separate disqualifying income from their overall revenue. In many cases, especially when transactions involve related parties or when the income is a part of broader commercial arrangements implying transfer pricing methods becomes necessary. So transfer pricing helps establish an arm's length valuation of the income attribute to the IP, ensuring that the taxable income is calculated fairly and in compliance with all tax regulations. So accurate calculation and clear separation of IP-related income are essential to demonstrate eligibility for the IP box benefit and to withstand scrutiny during tax audits. Proper application of transfer pricing principles protects taxpayers from adjustments or penalties imposed by tax authorities. So it was our second step. Third one,
So
yes,
just to supplement this, so the first step was legal analysis.
analysis.
Actually, second was also income qualification calculation. So these two steps are preparatory stages,
Yes.
where actually there should be close cooperation between managers, tax advisors, and professional accountants, just to prepare. Because one thing is to have an idea. Okay, we will apply IP box, but then there has to be close collaboration between managers, tax advisors, professional accountants, lawyers, just to prepare the whole plan of action step by step. Because if you apply IP box wrongly, then tax office may challenge this, and there will be problems. So these two steps, actually 1 and 2, as Anna explained, are actually preparations for or the development of the idea how to apply the IP box.
Exactly. So another step that you can see on our presentation is filing and reporting. So under the IP box regime, taxpayers cannot reduce their income tax advance payments throughout the year based on the preferential tax rate. Instead, the relief is applied and settled during the annual tax return filing. Taxpayers must keep separate accounting records for IP-related income, fulfill all reporting and compliance duties as mandated by Polish tax law to ensure transparency and proper tax treatment.
Yes, this may be confusing, but just we'll probably come back to this. But it is important to understand that as I said, the IP box regimes varies from country to country. In the Polish IP box regime, taxpayers do not need to obtain any license or any formal decision from the tax authorities to apply this incentive. Our tax law is based on the concept of self-declaration, self-assessment, and self-calculation. So actually, the taxpayer, the company, has to prepare everything on its own, has to as we see in point 3, the taxpayer cannot reduce income, but they have to pay regular advances for the income tax, which is 19%. And only in the tax return, which is filed at the beginning of the following year, the company should declare the income from IP rights, and then can reduce the tax to a lower rate. So that's how it. So there's no so it is important to understand the whole scheme. There's no need for any decision or formal license. taxpayers do everything on their own with, of course, group of advisors, and they pay throughout the year. They pay regular tax rate, and they can declare the preferential tax rate in the tax return in the following year, and of course then tax office. That's why preparation at these stages 1 and 2 is so important, because the tax office can, and normally tax office comes and try to verify the assumptions and the calculations, whether this incentive was properly applied, because and this is also important to understand and to remember, that the preferential 5% tax rate can be applied to the portion of income which is derived, as Anna said, from commercialization of IP rights. So when the company has revenues, they have to specify what portion of income is derived from IP rights, through sale or license or compensation, whatever, could be various solutions, and only on that part of income the preferential rate can be applied.
Exactly. So our last step that you can see is additional support and tax rulings. So generally, to gain legal certainty and properly apply the IP box relief, many taxpayers engage experienced tax advisors. So these advisors assist with feasibility assessment, preparing and maintaining required documentation, and also sometimes help in filing requests for individual tax rulings or interpretations for authorities. So these rulings can provide crucial clarifications and safeguard correct application of the regime in complex cases. So we think it's good idea to apply for tax ruling or interpretation from tax authorities. Okay.
Yes.
Here we have
Now, common pitfalls and challenges. We have to be honest with you that this Polish IP box incentive is a very good and very attractive one, but it has a lot of issues, and it's not easy in application, because it can be challenged by tax authorities. So as I said, so the pitfalls, we could have another webinar on pitfalls and what may not work. I will just say that it is important really to have this close collaboration between various groups, so managers, tax advisors, and professional accountants, and especially accountants who have direct experience with this specific incentives, because errors or omissions can result in the lost benefits or even more penalties. So you have to have, if you want to apply IP box regime, you do not also need advisor, but someone who has specific experience in application of this, and it is still developing. We have every month. Last month we have a very important decision of the Polish Administrative Court. What are the criteria for application of IP box regime? So the law was introduced 2019, so we have already 6 years, but it's still in a process of developing and finding what are the main principles and how to apply it safely.
Okay, case study.
Yes, so we presented the case study, which is based from our experience. So let's assume that we have a, as Anya mentioned, we see that the main area where this IP box regime is being applied under Polish law is computer programs, and it really works well, because it is it attracts a lot of investment, and companies like Amazon or Google has created research centers in Poland, are working, developing innovative products. And very often, the most in most cases, this innovative products are computer, it is software, it's various computer programs, so programmers, computer science. And this example, we prepared this example based on our experience, which can show you how it works in practice. So let's assume there is a Polish company which develops software for its parent company. We call it ABC Poland, ABC America. And ABC Poland and ABC Spółka ZOO invoices monthly for R&D services, including transfer pricing, markup, supported by benchmarking study. This is important maybe to mention. Anna mentioned about this very often. Of course, transfer pricing is not connected to, I don't want to confuse you. Transfer pricing is something completely different from IP box. But very often, if we have financial groups, if we have corporate capital groups, and you have, like in this case, which is very common, we have a parent company and subsidiary, automatically we have a question of transfer pricing, which means that any dealings or any transaction between parent and its parent company and subsidiary should be conducted on market on market terms, so at arm's length. The most typical solution how to establish what is the market terms for the transaction between two related companies is preparation of benchmarking standard, which sets the criteria, or sets the markup or the level of profitability which can be obtained. So although in this example, although commissioned by the parent company, Polish company determines the software concept, architecture, and development directions on its own, and also bears project risks. These are very important elements because very often these errors in application of IP box or omissions in application of IP box can result from this. Because if the Polish company does everything under the instructions from the parent company, then it could be understood by tax authorities as simply provision of services, which is not creation of IP rights. So as I mentioned earlier, it has to be very careful in this preparatory stage where we build up the whole process and make the plan of action. In this case, in this case study, in this case we have a situation where actually Polish company determines the concept and what it wants to create. So we're talking about the company which is maybe called, because the whole idea, and if we have even court case, it's important to prove that the taxpayer, that we are innovators and creators. It boils down to this. If you follow instructions from someone else, you are not a creator, you are not innovator. And once a year, a Polish subsidiary transfer all developed programs to the parent company. So this is the case study which is very typical, where American company sets up Polish subsidiary because Poland is famous for its IT specialists, and it's very beneficial for American companies to have a Polish manufacturer of IP rights. And now the question is, can they apply? Can in this case IP box can be applied? Yes, if we could go to another slide. So And the answer is not easy, because if you can see, and this is actually the answer to this case study, because if the Polish company operates purely as a service provider, then it cannot apply, and this is a mistake made by many companies, because service fees which the Polish company obtains from parent company do not qualify as IP income. Only if intercompany agreement really refers or recognizes the transfer of proprietary rights and directly attributes income to this transfer, IP box may apply. So coming back, if we could maybe go back to this slide earlier, maybe to the slide where we talked about the conditions.
Here.
Yes, yes. You see, it's proper and detailed records must be maintained related to financial. Maybe on the next page we have is income derived from qualified IP, such as license fees, sales of income, IP included in product or compensation can benefit from. So this is the qualified income. We have license fees, we have sales. So in our case study, if the Polish company developed software under its own direction, or according to its own directions and ideas, sales of IP means that transfer of IP rights to another entity. So we have, this is not too many options. As you can see, there's license fees, sales of IP. It could be IP included in product prices, or could be also compensation for IP rights. So for IP violation. So, but it does not apply to cases like service fees, simply for acting as a service provider. So it does not apply to any type of cooperation with the parent company. It has to be structured as a, basically it will be either, in practice, it will be either license fee. So the Polish company is the owner of the software under the Polish copyright law, and then it grants license to parent company, which is possible, so they can use it under the license agreements. Or, which is most common, basically the Polish company, after developing the software, after completion of these programs, because as we said, they're mainly programs, computer programs, they transfer the economic ownership to these rights to the parent company. And then, so the actual payment from the parent company must be recognized as a payment of the price for the ownership of the copyrights. Then it can be structured as IP rights, as IP box, So that's. Let's go back to our case study. So you can see this is a answer to the case study, which is quite complicated, but we want to show you. As I said, we want to be honest with you. It's a very good scheme, but very difficult, and one has to be very careful in application of this. Of course, just maybe as a digression, this is not the only tax incentives in Poland. There are a number of incentives. So even if very often we advise our clients, and even if it turns out that this facility, this incentives cannot be applied, there are a number of others which are similar, like R&D, so increased cost of R&D activity, or the special corporate income tax of 9% for newly created companies. It's 9%. It's more than 5%, but it's 9% income corporate income tax without any conditions. So sometimes we have a combination of plans that for the period of 2 years the company can operate, the newly created company can operate under the 9% income tax scheme, and then because IP box requires a lot of preparations, a lot of studies, a lot of thinking behind it that in implied, and very often it has to be really that it can apply only to the portion of income derived from for qualified in IP rights. So as you can see in the second paragraph, in many group structure, hybrid model, service fee for ongoing work plus separate IP transfer for programs is used to ensure eligibility. So in practice, very often the company, so this Polish company from our case study, they obtain income from many sources, but so they have to identify what income has been obtained through the sale of copyright to the parent company, and they can apply this preferential 5% rate, but only to this portion of income. So let's say that they have 10 million, they have to separate, okay, 2 million was from the sale of IP rights, so we can apply a 5% preferential rate to 2 million. 8 million needs to be taxed according to the standard rates. Okay, so now we can start our Q&A session. We see we see many questions. I see that some of the questions may not refer exactly to what we talked about, because maybe because we talked a lot about benchmarking study and transfer pricing. But it's good to see these questions, because it seems it is really very often these two topics, IP box or application of IP box and transfer pricing, can be connected. So we try to also answer these briefly, these questions regarding transfer pricing. So Anna, let's start from the first question.
The first question is, who can benefit from the IP box tax relief? So maybe I will answer this question. So generally, as we already mentioned, so both companies and also the individuals engage in qualifying R&D activities who own or co-own eligible intellectual property rights can, of course, benefit from the IP box by paying a reduced 5% tax rate on income derived from that IP.
There is, of course, just on this question, there could be a problem, which we also have to be honest with you, that it could be a problem when the company actually employs subcontractors.
Yes.
And because that's very common in IT sector, that there is a company, but it has not employees, because with employees it's quite easy, and all law applies. But if you have subcontractors and actually they create, so it could be a problem who can be called innovator or creator of the specific program which has been developed. Yes. Probably there's no time to go more into details, but then, as I said earlier, that sometimes will be difficult to use the pure IP box scheme into very complex scenarios. If you have company, the subcontractors, it has to be proper analysis, really, also of the agreements linking the company with subcontractors, and making sure who is the creator, and who can actually declare IP box regime, because it could be, in some instances, could be that it would be better to declare the creation of the IP rights at the level of subcontractor. Yes.
Yes, exactly. So maybe we will find another question to answer this.
Okay. Sorry. Yes. Yes. Is it possible to apply IP box regime to a new brick model which has been prepared by our RD department and registered as industrial design? What are the criteria? Very interesting questions. Good that, because of course most of the examples in our case study refers to computer program software, but as Anna also mentioned earlier, very often there's a list of qualified IP rights, and on the list is industrial design and utility design. And actually new type or new model of the brick or any product which has new features, innovativeness is in every sector. So if there is a new brick, and the company, I presume this question comes from the brick manufacturer company. So if they also, of course, they have R&D activity, and they work on the new models which have better functionality. So absolutely yes, this is we can apply this IP box regime to this. But the question criteria would be again, how to distinguish what were the costs of creation of this new utility, because very often new brick model will be utility model which needs to be registered with Polish Patent Office. And then if the company spent 1 million, 2 million, 5 million, or 10 million on actually on works, on research, on creation of the new model of the brick, and it has been registered to protect it from other users as a utility model, it can be applied, and this portion of income obtained by the company can be taxed with preferential rate. But it, again, as in our case study, it can only apply to the income which is derived from commercialization of this IP right. So there has to be license agreement or sale of this right. So actually, if they, or the right which is somehow included in the product, quite difficult. It's doable, but it's difficult. As I said, under Polish law, and probably this is all over Europe, we have the system of self-assessment and self-calculation and self-declaration. The companies to declare. So first they have to be certain, they have to be convinced that they can use it, they can apply IP box, and then once they are convinced, they can apply it, and then probably tax office may try to challenge it. So basically, yes, it's a very good example of using IP box to other. This does not have to be. We have IP box used in medicine, in pharmaceuticals. We have in new designs. Very often companies don't use it because don't apply IP box because they are not aware of this, and this is also partly one of the motivations of our webinar, to spread the information and to talk about IP box, which is absolutely very attractive and should be tried.
Okay. Okay, we have another question. So, what documentation is required to claim the IP box relief? So maybe I will try to answer this question. Generally, taxpayers must keep detailed records linking R&D activities, the development of IP rights, and also the income generated from these IP rights. So this includes tracking R&D expenses, income streams, and maintaining evidence to demonstrate the direct connection between R&D and IP derived income. So detailed records which are linked with R&D activities is the main point of the documentation which is required to claim the IP box tax relief.
Yes. What else? We have many questions, but we need to choose two or three
Yes.
more. Can can the service fee be treated as actual payment for the development of the software when the parent company pays money to its own subsidiary? I think this is in relation to our case study. Thank you very much for this question. Can the service fee be treated as a payment for the development of the software when the parent company pays money to its own subsidiary? So no. So as we try to explain in this case study, service fee. So fee which is obtained just for the provision of services. This is not part of the process of being innovator. In dealings between parent and subsidiary, it cannot be called in an invoice that it's a service fee, which is very common. That the parent company pays its subsidiaries simply for provision of services. That would be wrong, because this shows that they are providing services to the parent company, not actually developing the new products. What is the appropriate transfer pricing markup in the IT sector in Poland, and does it have to be supported by benchmarking study? This is one of the questions which I mentioned, not directly linked to our topic, but I can try to answer this. What is the appropriate transfer pricing markup in the IT sector in Poland, and does it have to be supported by benchmarking study? So the average, or the really standard level of markup in Poland in IT sector is 5%. This is the basic. So if you don't have any other additional factors, probably it would be safe to apply 5% markup, and this is very often the case. But of course, the markup depends on innovativeness of the cooperation. So the more innovative the product, the higher markup it should be. And does it have to be supported by benchmarking study? Benchmarking study, and we had to mention benchmarking analysis in benchmarking study, but we don't want to confuse you too much. Benchmarking analysis is important when applying for IP box regime, but in situation where you have related parties. If it's done independently, if there is no group, there's no capital group, then there is no need to go for the benchmarking study. And benchmarking study or benchmarking analysis is simply a survey done by the specialized accounting firms, which can establish what is the markup used in this area. So when we have Warsaw, Gdańsk, or Krakow, they can establish by checking the prices what would be the price offered by independent companies, and this price could be like a benchmark for establishing prices between the related companies. Benchmarking helps establish whether the pricing and conditions of IP transactions are in line with market practices and arm's length pricing. But this is important only when we talk about related companies. So situation parent and subsidiary, or sister companies, a group of companies. Then it's really complicated, because we have to look at the IP box scheme and also transfer pricing, and it has to work together. Yes, and then that's why this markup I mentioned 5%, because when you have a related companies and the obligation to use market terms, it means that companies do not have freedom to agree markup, whether it would be 30% or 40%. No, this would be against the law. It has to be markup which is supported by the benchmark study. I know it may be confusing. Maybe we need another webinar on benchmarking, but that's how it is. As I said, you can listen to our webinar maybe quietly once again, and it's quite complicated. It's very attractive, but very complicated indeed. Let's go to another question. We have 4 minutes more. Oh, it's a question I can answer this, Anna, because it's actually what I said earlier. Is it necessary for the taxpayer to obtain administrative decision or license for applying IP box? No. So that's important. Although we put in our presentation step-by-step application, but this application is merely thinking and preparing and making all planning how this can be applied. But then actually it's all based on self-declaration, self-assessment, and self-calculation. So no. What else? Moreover, actually, as we explained during our webinar, the taxpayer pays normal advances for the so calculates, even if we know that that's part of our income is derived from IP box, from the sale of IP rights. So to put it blunt, or to put it vividly, even if I know as a taxpayer that I receive income or revenue from the regular sale of software to my parent company, so I know I should use preferential rate of 5%. I still, by law, I have to pay regular rates, so 19% throughout the year. And only in my tax return in the following year, I can declare preferential rate, and I can deduct what I overpaid and apply and ask for the refund. That's how it works. So to answer this question, no, there's no decision, there's no license. Everything's based on self-calculation. Only afterwards, the normally tax authorities try to verify, because there are so many omissions, so many errors in this. So maybe it's not even bad will, but they try to check whether the IP box have been applied properly. So there are controls. We have for one more, maybe, Anna. You can answer this probably.
Maybe you have also maybe this one.
Okay.
Okay, so what types of income qualify for the preferential 5% tax rate? So Grzegorz, of course, already mentioned this. Qualified income includes license fees, of course, sales of IP rights, of course, income embedded in product prices related to IP, and also compensation for IP infringement. So provided it directly relates to eligible IP created or improved through research and development.
Yes, we have large number of questions regarding this benchmarking study, but I think I already answered this, that yes, if you could change to our actually, yes, now maybe you could click this. We are trying to Okay, I think there's a long list of questions regarding benchmarking study. I think we could stop on this point. So thank you very much for attending our webinar. I hope it will be beneficial in you, and it will help you to decide what to do if you are innovator or creator. And we will probably and definitely will prepare the new series of webinars going following the subject of IP box and other tax incentives in Poland.
Okay.
So thank you very
Thank you
much.
very much.
Bye bye.